The RCI Ribbon indicator is a powerful technical analysis tool used in financial markets. The Rank Correlation Index, or RCI, measures the correlation between price and time, helping traders identify potential trends and market reversals. What makes the RCI Ribbon unique is its visual representation of multiple RCI lines with different time periods displayed together as a ribbon formation. Each line in the ribbon represents the RCI calculated over a different time period, typically ranging from shorter periods, like 8 days, to longer periods, like 50 days. The primary purpose of the RCI ribbon is to help traders identify market trends and potential reversal points. When all the ribbon lines are aligned and moving in the same direction, it indicates a strong trend. Conversely, when the lines begin to diverge or cross, it may signal a potential trend reversal. The ribbon formation helps traders visualize market momentum across different timeframes simultaneously, providing a more comprehensive view of market conditions. The Rank Correlation Index, or RCI, is a technical indicator that measures the correlation between price and time. Unlike many indicators that focus solely on price or volume, the RCI examines how price behaves over specific time periods. The RCI ranks recent price movements to determine market momentum. The indicator works by assigning ranks to each price point based on its relative value within the period being analyzed. The RCI ribbon format displays multiple RCI lines with different period settings. These typically range from shorter timeframes, like 5 or 9 periods, to longer timeframes, like 14 or 21 periods. When these ribbon lines align and move in the same direction, it signals strong trend momentum. When the ribbon lines begin to diverge, it can indicate a potential weakening of the trend or an upcoming reversal point. Notice how the shorter-term periods, shown in red and gold, change direction first, while the longer-term periods, in white and green, lag behind. To summarize, the RCI ribbon indicator helps traders visualize trend strength and potential reversals by displaying multiple timeframes of the Rank Correlation Index. The RCI ribbon provides several pattern signals that can help interpret market conditions. When all ribbon lines are aligned and moving in the same direction, it indicates a strong established trend. Ribbon expansion occurs when the lines spread apart, indicating increasing momentum in the current trend direction. Ribbon contraction is when the lines come together, signaling decreasing momentum or potential consolidation phases. Crossovers between different period lines can signal potential trend changes or market reversals. The relative position of shorter period lines compared to longer period lines helps determine the current market phase. To summarize, the key ribbon patterns provide valuable signals about market conditions and potential trend directions. Bullish signals with the RCI ribbon are powerful indicators of upward momentum. When identifying bullish patterns, we look for specific formations in the ribbon indicator. Let's start with a neutral state ribbon, where the lines are relatively flat and close together. The first bullish signal occurs when the ribbon lines begin to align and point upward, indicating a shift in momentum. The most powerful bullish signal happens when shorter period lines, like the 9-day and 14-day, cross above longer period lines, such as the 30-day and 45-day. Notice how the ribbon lines begin to separate as the trend develops. The wider the separation between lines during an uptrend, the stronger the bullish momentum. This entire pattern, where shorter period lines cross above longer period lines and the ribbon slopes upward with increasing separation, is called a ribbon buy signal. It's one of the strongest indications to enter a long position. Trend reversals can be spotted when the ribbon lines begin to converge and then cross over. When identifying an uptrend reversal, look for shorter period lines crossing below longer period lines. Here we can see the ribbon lines representing different time periods. Initially, they're moving upward in parallel formation. Notice how the short period line begins to converge with the others and eventually crosses below the longer period lines. This is a strong bearish signal, indicating a potential trend reversal. Conversely, in a downtrend reversal, we look for shorter period lines crossing above longer period lines. Again, observe the ribbon lines. During the downtrend, they're moving downward together. As the short period line begins to rise and crosses above the longer period lines, it signals a bullish reversal may be forming. These crossover points provide early warning of changing market conditions, often before traditional indicators signal a reversal. By carefully watching for these ribbon line patterns, traders can position themselves ahead of major trend changes. The RCI Ribbon indicator becomes significantly more powerful when combined with other technical indicators. While the RCI Ribbon provides valuable trend information on its own, combining it with complementary indicators can significantly reduce false signals and increase trading accuracy. Volume indicators work exceptionally well with the RCI Ribbon to confirm the strength of identified trends. When the RCI Ribbon shows a bullish trend with clear separation between lines, high volume confirms the strength of this upward movement. Without volume confirmation, even a strong ribbon pattern might be less reliable. Volume adds the crucial dimension of market participation. Support and resistance levels work particularly well with the RCI Ribbon to identify potential reversal points. When price approaches key support or resistance levels, the RCI Ribbon often shows changes in momentum through convergence or crossovers. Notice how the price reversals occur at these key levels, and the ribbon pattern changes precisely at these points, providing valuable confirmation. This combination significantly improves trading accuracy by providing both price-level context and momentum confirmation. Oscillators like RSI and MACD are particularly valuable when combined with the RCI Ribbon for confirming overbought or oversold conditions. While the RCI Ribbon shows the overall trend structure, oscillators can provide precise timing for potential reversals. Notice how the RSI reaches overbought territory just as the ribbon begins to converge. This confirmation provides a much stronger reversal signal than either indicator alone. Divergences between price and oscillators, when confirmed by ribbon pattern changes, provide some of the highest probability trading setups. A multi-indicator approach with the RCI Ribbon significantly reduces false signals in your trading. By combining the ribbon with the indicators we've discussed, you create a robust trading system with multiple confirmation points. Remember, the most reliable trading signals occur when multiple indicators align to tell the same story. This synergy between the RCI Ribbon, volume indicators, support and resistance levels, and oscillators creates high-probability trading setups that are significantly more reliable than using any single indicator alone. To set up the RCI Ribbon on your trading platform, you'll need to work with the custom indicator settings. Most advanced trading platforms allow custom indicator creation. Let's walk through the typical setup process. First, add a custom RCI indicator. You'll need to create multiple RCI indicators with different period settings. Repeat this process for each period you want to include in your ribbon. Common period settings include 9, 14, 21, 30, and 45. Each period has different sensitivity levels and is suitable for different trading styles. Short periods like 9 and 14 are more sensitive and suitable for short-term trading, while longer periods like 30 and 45 work better for position trading. Different trading platforms offer varying capabilities for setting up the RCI Ribbon. Some platforms like TradingView and thinkorswim offer pre-built RCI indicators. Platforms that support custom coding languages like PineScript offer the most flexibility for customizing your RCI Ribbon. Once set up correctly, your RCI Ribbon should display multiple lines with different colors representing each period. For optimal visualization, arrange your RCI lines from shortest to longest period, which helps in quickly identifying trend changes and potential trading signals. The RCI Ribbon provides clear signals for practical trading strategies. A complete strategy framework includes entry and exit criteria based on ribbon alignments, expansion patterns, and proper risk management. Let's examine our long position strategy using the RCI Ribbon. Enter long positions when shorter period lines, shown in green, cross above longer period lines, and the ribbon begins to expand upward. The key entry criteria include shorter period lines crossing above longer period lines, upward ribbon expansion showing increasing momentum, and confirmation from price action making higher lows. Exit long positions when the ribbon begins to contract, shorter period lines cross below longer period lines, or when price momentum slows significantly. Now let's examine our short position strategy using the RCI ribbon. Enter short positions when shorter period lines, shown in red, cross below longer period lines, and the ribbon begins to expand downward. The key short entry criteria include shorter period lines crossing below longer period lines, downward ribbon expansion showing increasing bearish momentum, and confirmation from price action making lower highs. Proper risk management is essential, regardless of your trading direction. Place stop-loss orders at logical levels based on recent price action and volatility. Risk only a small percentage of your capital on each trade, typically 1 to 2%, and aim for a reward-to-risk ratio of at least 2 to 1. To implement these strategies effectively, first identify the current market trend using the RCI ribbon pattern. Look for crossovers and ribbon expansions that signal potential entry points, and enter positions in the direction of the dominant trend. Always place stop-loss orders at logical levels outside the ribbon range, and plan to exit when the ribbon contracts or crosses in the opposite direction. As with any trading strategy, always backtest your RCI ribbon approach thoroughly before trading with real capital.